Welcome back to the Market Chronicles, your guide through the twists and turns of the financial world.
And this is episode number 5 already.
Time flies when you're deep diving into market trends. And today, we're going deep on Bitcoin.
Taking a close look at some recent insights from Lyn Alden, a macro analyst who always has her finger on the pulse.
Absolutely. For our viewers on YouTube, make sure you hit that subscribe button so you don't miss out on future deep dives.
All right, so Lyn Alden, she's been talking about Bitcoin's liquidity and how it's changed over time.
It's interesting, right? Bitcoin's market cap is way bigger now than it used to be.
Yeah, much larger. But she points out that it actually takes more to move the price now.
Which kind of implies more stability, wouldn't you say?
Exactly. It suggests there's less volatility than there was before.
So what's driving this shift?
Well, Alden talks about this concept of sticky money.
Sticky money.
It basically means that a growing portion of Bitcoin holders are in it for the long haul.
These are the folks who aren't spooked by short-term price swings.
Right. They believe in the long-term potential of Bitcoin, and they're not selling at the first sign of a dip.
So how does this stickiness impact potential price moves?
Well, think about it. A sharp rise in price might trigger some of these long-term holders to, buy the Lambo.
Cash out a bit, right?
Yeah, take
Yeah.
some profits. But on the flip side, if there's a price drawdown, those dips might be more controlled.
Because the sticky money folks are holding strong.
Exactly. Now, let's bring in another piece of the puzzle that Alden's been talking about. The whole U.S. debt ceiling drama.
Oh yeah, that's been heating up lately.
The debt ceiling, just to clarify for anyone who's not familiar, it doesn't authorize new spending. It's about the government being able to pay for spending that's already been approved by Congress.
It's like agreeing to buy a car and then refusing to pay the bill once it arrives.
Right. It's about meeting existing obligations. But in recent years, it's definitely become a political football.
Every time we get close to hitting the ceiling, it feels like a game of chicken in Washington.
And, if the debt ceiling isn't raised and the government can't issue new debt, they might have to resort to using the Treasury General Account. That's the Treasury's account at the Federal Reserve.
The TGA, as it's often called.
Right. They might have to drain that to keep things running.
But here's where it gets interesting. Draining the TGA could actually pump liquidity into the financial system.
Yeah, mini QE, almost.
As the Treasury uses those funds, they flow back into the economy.
Which brings us back to Bitcoin, because as Alden points out, Bitcoin's price has often shown a strong correlation with liquidity, particularly global liquidity.
So a potential TGA drawdown could, at least temporarily, be a positive for Bitcoin.
Potentially. But we also have to consider the strength of the U.S. dollar.
The dollar has been on a tear recently.
And a strong dollar can actually lead to tighter global liquidity.
How so?
Well, a lot of borrowing, particularly in emerging markets, is done in U.S. dollars. When the dollar gets stronger, those debts become more expensive to service in their local currencies.
So they need more dollars to make those payments.
Exactly. And to get those dollars, entities in emerging markets might sell off their dollar-denominated assets, like U.S. Treasury bonds.
Which can put downward pressure on global liquidity.
Right. And that can have ripple effects across financial markets.
Including Bitcoin. So we've got this seemingly contradictory situation where both the dollar and Bitcoin have been performing well recently.
Which seems to go against the usual pattern.
Alden's theory is that the recent U.S. election and the potential for more Bitcoin-friendly policies might be offsetting those negative liquidity effects from the strong dollar.
So the political landscape is playing a significant role here.
Absolutely. It's this intricate dance between Bitcoin, the dollar, and global macroeconomics.
And it raises some interesting questions about whether this dynamic will continue.
Is this the new normal or just a temporary blip? It's something to keep an eye on for sure.
Now let's zoom out a bit and think about the bigger picture of liquidity.
Okay, so we're talking about more than just the TGA and QE.
Right. There's domestic liquidity, which is heavily influenced by the Fed, with things like QE and QT.
Quantitative easing and quantitative tightening. Those are the big levers they use to adjust the money supply.
Exactly. And then you have things like the reverse repo facility, which acts as a bit of a buffer for excess liquidity.
That's like a parking lot for cash that banks don't want to lend out right now.
A good analogy.
Yeah.
And the Treasury's actions also play a role here.
Like how they manage the TGA.
Right. Government spending without issuing bonds to cover it basically injects liquidity. But when they borrow money and just sit on it in the TGA without spending it, that sucks liquidity out of the economy.
It's like a game of financial musical chairs.
Kind of.
Yeah.
And then there's the availability of credit.
how easy or difficult it is for businesses and consumers to get loans.
Exactly. Easy credit means more money flowing around, which boosts liquidity, but when lending tightens up, it's like hitting the brakes.
Makes sense. And what about interest rates? Don't they impact liquidity too?
Absolutely. Higher interest rates usually mean higher borrowing costs, which can put a damper on liquidity.
It's a tough balancing act for central banks, trying to keep inflation in check without choking off economic growth.
For sure. Now, on the global liquidity side, Alden really emphasizes the importance of the US dollar.
We talked about that a bit earlier, how a strong dollar can actually lead to a contraction of global liquidity.
It all comes down to the fact that a lot of borrowing, especially in emerging markets, happens in US dollars. When the dollar strengthens, those dollar-denominated debts get more expensive to pay off in their local currencies.
Because they need to buy more of their own currency with those dollars just to cover the debt payments.
Right. So what happens? Entities in these emerging markets might start selling off their dollar-denominated assets. Things like U.S. Treasury bonds.
To free up dollars to make those debt payments.
Exactly. And that selling pressure can have a ripple effect, leading to tighter global liquidity.
And potentially impacting Bitcoin's price.
Precisely. It's one of the reasons why we often see an inverse correlation between a rising dollar and a weaker performance in assets like Bitcoin that are really sensitive to global liquidity conditions.
So Alden points out this recent paradox where we've seen both the dollar and Bitcoin doing well.
Which seems to go against the grain.
Her take is that the recent U.S. election and the possibility of more Bitcoin-friendly policies might be counteracting those negative liquidity effects we usually see from a strong dollar.
At least for now. It just goes to show that there's always more than one factor influencing Bitcoin's price.
It's a web of interconnected forces. But Alden doesn't just leave us hanging with all this complexity. She does offer a cautiously optimistic outlook for Bitcoin over the next 12 to 24 months.
She sees this fiscal dominance trend, with governments spending more than they're bringing in, as a potential tailwind for Bitcoin.
But she also acknowledges there are some potential headwinds out there, right?
Yeah, things like ongoing trade wars and the possibility of the dollar continuing to strengthen, those could create some challenges.
But she doesn't seem to think those negative factors will have a lasting impact.
And she views the policy landscape in the U.S. as being anywhere from neutral to potentially bullish for Bitcoin.
Especially with the possibility of more favorable regulations under the new administration.
Now, Alden also puts a lot of emphasis on these on-chain indicators.
What are those exactly?
They're metrics that give us a glimpse into the behavior of Bitcoin holders and the overall health of the Bitcoin network.
Sort of like checking Bitcoin's vital signs.
A good way to put it. And metrics like the market value to cost basis ratio and the percentage of unmoved coins suggest that Bitcoin is still kind of in a mid-cycle phase.
Meaning we're not seeing signs of it being overextended or near a major peak.
Exactly.
So the message here seems to be that while short-term volatility is always a possibility, Alden's analysis suggests a pretty positive long-term outlook for Bitcoin.
That's right. She believes the fundamental factors supporting Bitcoin are still strong.
Of course, predicting the future is never a sure thing, especially in the world of crypto.
But Alden's insights, based on her understanding of macroeconomics and the Bitcoin ecosystem, do provide a helpful framework for thinking about what might be ahead.
She's definitely putting her money where her mouth is, so to speak, by remaining bullish on Bitcoin's prospects.
And this view is shared by a lot of other analysts who believe that Bitcoin is still on a path of long-term growth.
Even with the inevitable bumps along the way. So what does all this mean for you, the listener? What questions does this raise for you about Bitcoin and how it fits into your own investment strategy?
It's definitely something to think about. Here's a final thought for you to ponder. We focused on Alden's insights today, but what other factors beyond the ones we discussed could influence Bitcoin's price in the coming months?
Could emerging technologies play a role? What about changes in regulations? Or even some kind of unexpected geopolitical event?
The world of finance is always full of surprises, and that's what keeps things interesting.
That's the beauty of it, right? There's always something new to learn and explore.
Absolutely. Keeps us on our toes.
So to wrap things up, it seems like Alden is painting a cautiously optimistic picture for Bitcoin.
Yeah, she sees the potential for continued growth, but she's also realistic about the risks and uncertainties out there.
And it's important for all of us to keep those in mind as well. No matter how bullish we might be on Bitcoin, or any asset for that matter, it's crucial to do our own research.
Absolutely. Understand the risks, Think about your own investment goals and your own risk tolerance.
Don't just follow the hype.
Yeah.
And if you're looking for a deeper dive into these topics, I highly recommend checking out Lyn Alden's work.
She's a fantastic resource. A lot of great insights there.
Well, that brings us to the end of another episode of the Market Chronicles.
Thanks for joining us on this deep dive into Bitcoin and liquidity.
And for those of you watching on YouTube, make sure you hit that subscribe button and the notification bell so you don't miss any future episodes.
We'll be back soon with more deep dives into the financial world.
Until then, happy investing.